Hello and welcome to eOption. My name is Scott Barry. I'm a trader on the eOption trade desk. Today we are going to cover buying your first put option with eOption. Now, put option, why would you buy a put option? A put option is a option agreement is where you are speculating that the underlying security is going to go down. There's a couple different useful ways you can use put options in your portfolio. One would be to purely speculate that a stock had a big run and maybe you think it's going to pull back or go down significantly. So you'd be buying a put option on that particular security. And another way would be to protect profit in an existing position. So let's say you have a large gain in a stock and you don't necessarily want to sell it right away, but maybe you want to hedge against a potential downturn, maybe with an upcoming earnings or just general news and general market direction. You want to protect the profit. You can buy a put option to protect those shares. So when you first go in, you would go to a option trading screen and what I'm going to do is open a put on Apple. Apple has had quite a run up in recent weeks. And I believe they're going to have earnings out in the next month. So we'll go out to May. Apple's trading around 165. So we'll look at at the money put in May. And currently, as you can see on the screen, it's trading around $5.70. If you're buying at the money, if you want to maybe pick a slightly cheaper strike, you could go out of the money by $5, and that would drop it to closer to around $4. So let's say you had a speculation or a feeling that Apple is going to move down, maybe go back below 160. You could buy a 160 put out in May. And this is how you would do it. You would go open up an option ticket. You would put in your underlying symbol, buy to open one, May monthly, 160 put. We'll go ahead and do it at market. Verify trade. All right, it says it filled, so we'll go check our positions and orders. And when you go over to positions and orders, you can see it's sorted by calendar date when you place the order. We bought one at an execution price of $385. So between now and May, we're basically hoping that Apple falls below 160. For us to break even, it would have to fall an additional $3.85 below 160 between now and expiration to break even. A second way that you can use puts is to protect profit in an existing position. So in our demo account, we bought 100 Microsoft several months ago around 139. We've got about close to 50 points of profit in this demo account. So one way to protect this position between now and, again, earnings season coming up in April would be to buy a put, which then you'd have one of two options after you buy the put. One would be to let the position get assigned or exercise the put at whatever strike you pick. Or secondly, you could, if you have, let's say, a long-term gain in it, you could trade out of the put for a profit if it goes into the money. So very simple. It's the same procedure as buying the Apple. We'll go ahead and go back to our option trading screen. We have 100 shares of Microsoft. We'll change the underlying symbol to Microsoft. And once again, we're going to go out past the earnings season in April. You hit add option, buy to open. We have one contract to cover our 100 shares. Let's see. So Microsoft's currently trading around $288. I just want to put in a little insurance policy that between now and the third Friday in May that it will that we'll be able to sell it at 280 or higher. Currently, that would cost about $7.85. Let's check one other strike. Let's check the 285. Actually, to get 5 more points, it would cost us $9. And if you wanted to go a little bit cheaper insurance, you could check the 275s and it would be 6. So I'm going to go back with our original and protect the stock at $280. So we're going to buy to open 1 May 280 put at the market. You'll get your verification screen. It's going to cost us $775. Hit trade. And you can see that we bought to open 1 280 put. Now, if Microsoft between now and May happens to go into a downward trend, then the put gives us the right to sell the shares at $280. And we can exercise that at any time, being the long put holder, or we can also trade out of it as a short-term trade and keep the shares of Microsoft if need be. So that is how you would place your first put options, again, to either protect a position or to speculate of a downward movement of a position. If you have any questions, feel free to call one of us on the trade desk. We would be glad to help. And thank you for watching today.